Absolutely, Harsh. Morning and morning to all our viewers. Just taking a look at how the global markets have reacted because, at one point of the day, when the day of trade started for the US markets for Wall Street, Dow Jones was touted to open lower by 400 points. It opened lower by 800 points and then it has shut shop lower by about 576 points. There was a little bit of recovery in the market when Donald Trump came out with a statement saying that he doesn't think the Iran war will continue. On the back of that one statement, amid everything else that he said, there was a very nominal recovery in the market from the day's lows, but nonetheless it's been a cut of 1% for the Dow Jones, 0.3% lower for the S&P, and in fact Nasdaq managed to finish in the green on the back of this comment because Nasdaq was losing very little and then it inched a little bit of a recovery for itself. So 0.2% higher in the on the Nasdaq for Wall Street. That is the takeaway coming in from the US market. The broader end of the market was slightly under pressure. You've got the Russell 2K that was lower by about 1% as well. So that's on Wall Street. Shifting focus and talking about Europe, of course, Europe cuts have been deeper and exaggerated because European markets closed before Donald Trump released his next list of statements, wherein he did say that it doesn't seem like the war with Iran will continue. But yes, on the back of that, you've got France that was lower by 2.25%. Similar moves coming in for DAX as well. FTSE, which is UK's index, was lower by 1.6%, and the overall stock 600 also was lower by 1.6%. So extreme weakness. That's the kind of day of trade that European markets have seen yesterday. Shifting focus then, let's take a look at how Asia has opened this morning, and it's been a very mixed open coming in because on one hand you have the Shanghai that's absolutely flat. We've got some data coming in from China as well this morning in terms of their inflation rate that's coming at 1% compared to an estimate of 1.3%, and PPI is also slightly higher in fact than what the street was estimating. So mixed inflation data. On the back of that, Shanghai is lower by 0.2%. Hang Seng is absolutely flat, but take a look at Nikkei. We've seen a lot of correction on the Nikkei in the last 3 trading sessions, and it seems to be trying to recuperate all of those losses because it's a 2% uptick coming in on Nikkei this morning, and back above the 68,000 level is where the Nikkei is. While that's on equity moves, let's shift focus and talk about oil. We've seen a lot of back and forth coming in between US and Iran last evening, but you've got Brent that's at 78.8. Remember, at one point it had crossed $80 a barrel. We've seen a little bit of a pullback over there, 78.8. So $79 per barrel thereabouts is where Brent is. WTI is also higher by about 1%. $74.2 a barrel is where WTI is. Just taking a look at what the precious metals are doing, absolutely flat. Gold is once again below 4,100. Silver continues to be between $58 and $59. So that's on precious metals. It was the US 10-year index that saw a very sharp spike when the initial comments from Donald Trump came in yesterday, and 4.57. So continues to stay elevated above that 4.55% mark for the US bonds. Now let's shift focus to some global comments that we've been tracking. And first, of course, we've got comments coming in from Donald Trump wherein he said that Iran wants to make a deal, but they don't know how to go ahead with that. He said that don't think Iran war will start again. He has said that he's not sure if he wants a deal with Iran anymore. He doesn't know how to deal with Tehran anymore, and he doesn't know if he wants to deal with Tehran anymore. He says they have an oil glut right now and oil will be very free, very easy, very fast. But on the contrary, he has also said that they will also do some things that may lead to a little bit of a spike in oil prices, and oil prices may lift a little bit, but they're not looking to do anything long term on Iran, is at least the comments coming in from Donald Trump. Next up, we've got the Fed minutes coming in of the FOMC meeting that was held on June of 16 and 17. The biggest takeaway from this minutes is that a few saw case for raising rates at the June FOMC meeting. So there has been mixed views coming in from within the Fed. We've heard commentary from a whole lot of Fed presidents as well in terms of where they think rates are headed in the near future. So that was one line that really stood out from the Fed minutes, other than the fact that majority saw risk high inflation, and that may affect expectations of the Fed going ahead. Lastly, we also have some comments coming in from the International Monetary Fund, IMF, on India, China, as well as US economies. For India, they've cut India's GDP growth forecast for FY27 by 10 bips to 6.4, but they've raised our FY28 forecast by 20 bips to 6.7. They've raised China's GDP growth for 2026 by 20 bips. And when it comes to the US, they've kept their US growth projection for 2026 unchanged at 2.3%. For the global inflation, they see averaging around 4.7% in 2026. And they say developments in West Asia will be the risk to baseline estimates. So that in a nutshell sums up all the important global comments that we've been tracking along with equities and commodities. But while we're talking about some important comments, also listen in to US Vice President J.D. Vance talk about his view on where crude prices are headed.